Real estate in Australia has once again fallen further down. This is definitely a trend that has not let up. All throughout 2018, we have seen prices in Sydney in particular come down to a level which has started to worry market analysts who in fact expect this route to worsen throughout 2019. For homeowners who are barely above water with their massive mortgages, what does this mean for them? You came here for the truth, so let me unveil that for you. Today, we are going to focus specifically on Australian real estate. I also want to talk about New Zealand very briefly. I want to mention China if I can. There's a lot in here. I know that I have viewers from all over the world, so this video is for you. Australia's real estate markets are changing extremely fast. Sydney just posted its biggest annual price fall since 1990. It's sinking 7.4%. And that is a significant fall. All the while I have been tracking the progress. I've been showing you through these videos as it happened. This is coming from a very, very high place. Okay, so obviously if you see a drop in the price, it's still going to be very high, even if it is 7.4% in a year. If Australian real estate was a movie, we are at a crucial point in the plot, but this movie is really hard to watch. Imagine all these people that are underwater because they have taken on way too much debt and now their home is worth even less than they bought it. Or maybe it's right around that same level and they realize what's happening here. The roller coaster's on the way down, not on the way up. If you go on real estate websites, instead of prices, you keep seeing the words price withheld and contact agent. What does that tell you about the pricing in Australian real estate today? They want you to call the agent. They want you to negotiate. Come and see the place. Just take a look. Just take a look. And then they can convince you in that way because they know that the prices right now are unjustifiable because they're heading down. And when that happens, it's a snowball effect that will only get worse. So these are talking about the listings in here. I wanted to move on to show you this. We're looking at this statement as well as the chart here. In October 2018, Sydney dwelling values are 8.2% lower than their peak. So think about this now. From the very highest point up until today, we are seeing prices 8.2% lower. That is very significant. If this continues as it has been, we're going to be 10% lower. Then that is going to start that snowball effect. It's already happening. I've been doing these videos on here. I've been showing the progress in a lot of individuals. Even while I'm showing the data on here, people are denying it. Since 1980, the only larger decline recorded in Sydney was a minus 9.6% fall in values, which started just before the last recession. This decline is now longer and deeper than most, with little sign of abating. So you'll see this from 1984 up until present day, all of the declines that have been experienced in Sydney. It's a telling chart, in fact, showing us here how this isn't the first time it has declined, that's obvious, but it is one of the most significant. And if this continues, certainly it could be even worse. It could be even worse. We're going to see what happens here along with interest rates, along with the global economy, along with what's happening in other real estate markets around the world. That's going to have a major impact. Australia's property slump casts doubt on household spending. So Australia's falling house prices are raising doubts about the resilience of household spending, signs of weakness emerging. They're having to basically deal with all of this at a time when debt has reached its maximum point. Australians are in the most debt ever. When you look at their income compared to the amount of debt they have, it is absurd. It is even higher than the absurdity seen in Canada, if you can believe it or not. So that's what we're seeing right now today. Looking at this, it worries me. It definitely worries me, not just for the people in Australia, but a market crash in one area will, of course, spill over into the next. This is a good sign for those who are waiting to get into the market, but it's terrible for those who really overextended themselves and who were swindled by those in the industry telling them, now's the time to buy, now's the time to buy. You've been watching it go up higher, now's the time to buy. And of course, they're making a commission on those sales. All right, looking at this now. 5 economists' predictions for national house prices across 2019. All of these individuals have suggested it's coming down, with the lowest being minus 1% and the highest being as much as 7.5%. Look, if it came down this much throughout this year, 2018, why wouldn't it be equal to or greater than in 2019 if the conditions are going to be worse in 2019, as is generally expected? Not anything to do with Australia, not anything to do with any particular country. It's the global economy that's suffering today. How long will values take to return to peak levels? Historically, it has been pretty quick, but has tended to happen on the back of falling interest rates or government stimulus. Neither is out of the question, but both look unlikely at this stage. So this chart shows us again from 84 up until present day, all of these recoveries that have been experienced. It can happen, certainly. But as they mentioned right in this post, that with this, we see negative or not declining. We see declining interest rates. We see a situation that is beneficial. But today, things look a lot different. They really do. Annual change in dwelling values. You can see Sydney here, minus 7.4%. Melbourne is about minus 5%. Brisbane is actually positive. And if you don't pronounce Brisbane correctly, then you get a lot of upset and pissed off Australians. Okay, I learned that one the hard way, and I'm sure I'm pronouncing everything wrong anyway. All right, my friends down in Adelaide, that's actually in the positive territory. Perth is negative. Darwin is negative. And you're looking at all of these as being basically together being into the negative for the most part, where you have the major cities like Sydney and Melbourne that are down quite a bit right now. I mean, you see that in a 1 year span, real estate prices falling this much is a significant drop. It's supposed to be very slow and steady. As property values fall across the country, interest in the future direction of prices, particularly as many Australians contemplate whether it's time to buy, hold, or sell, has never been stronger. All right, interesting. After a meteoric rise in Sydney's prices over the past 5 years, aided by the fear of missing out by both investors and owner-occupiers, property prices quickly changed tack midway through 2017, catching many experts by surprise. Oh my goodness, I couldn't believe it. Prices actually fell. It can happen, believe it or not. Well, in the middle of last year, several top economists were predicting house prices to, in fact, increase in 2018, one forecasting as much as 9%. But since then, house prices have experienced their largest and longest peak-to-trough decline in recent history, spurred on by increased housing affordability constraints, a banking royal commission with a microscope on lending standards, and APRA's restriction on new investor loans. They're trying to make excuses for it, but it's always the same. If you're tightening your belt as a central bank, everything is going to be affected. The entire economy, the real estate, the stocks, and everything else. It's just the way it is. Property prices named the worst thing about Australia. Alrighty, so we could see that's happening today, and essentially what we have here are the same problems that we will experience in other places around the world. We have a big problem today that is not being accounted for, that the entire global economy is weakening. Look at the interest rates right now. As you can see, I can't vouch for this particular website. It's showing HSBC. You might be able to get something around 3.6%. I think it's actually a lot higher than that, but it doesn't matter. Even if it is 4.5%, 5%, that's still historically very low for a mortgage rate. And I think that this will, in fact, push the people over the edge. Chinese granted permanent residency in Australia. Things are changing. The landscape is changing. You have a lot of foreign buyers interested in Australia, and that money has helped to keep prices elevated. All right? Australia is one of a growing number of countries that have tightened their foreign investment rules in response to record levels of Chinese capital inflows in recent years. Since 2016, the government has banned the country's 4 major banks from lending to foreign property buyers who do not have domestic incomes. So they're trying to change that, what has happened right now. Earlier this year, New Zealand prohibited foreigners from buying property altogether after strong foreign demand, mostly Chinese, pushed property prices out of reach of many locals. That's exactly what I'm talking about. When the average person can't afford the average home, you've got a problem. It's not just because of foreign buyers, and it's easy to point at the foreign buyers. Well, we should be pointing at the foreign institutions known as the central banks who are pushing these up higher and screwing everything up. And Canada terminated its popular Canadian Federal Immigrant Investor Program created to attract wealthy foreign business people and their families in exchange for permanent residency because of a huge backlog of applications from Chinese and the influence of scheme beneficiaries on local housing prices, particularly in cities like Vancouver and Toronto. Canada's absolutely unbelievable compared to what people make. The prices are astronomical and it's not getting any better. Even when prices are coming down, it's still not enough. In the case of Australia, looking at 7 or 8% in Sydney, not enough. They need to come down 20, 30, 40% and more in order to be at near fair value. I would still say that's overdone, but we need a significant decline, all right? It's not like the United States that had seen a dramatic fall throughout 2008 and into 2009 and so on. We didn't get that in Australia, New Zealand, in Canada, in places of Europe, and other places around the world. Okay, we didn't see that. So imagine the prices are still going higher and higher, and it needs to come down. If you found this video informative, please give me a thumbs up. If you love my pronunciation of your Australian cities, then also give me a thumbs up. If you hate them, give me a thumbs down. And if you want the financial education you were not taught in school, well then, these 2 books have it all. You can actually read a lot about real estate in both of these books. I've talked about all the asset classes, in fact. So check it out. Link is in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.